I was willing to pay the price in January when it was 20% higher, but now I'm happy about the discount. The only thing that I have to ensure is
there are huge opportunities at the moment. How do you tap into them? How do you replace uncertainty with certainty? Because my question to you is, how many of you feel uncertain with what's going on at the moment? Prices are dropping heavily. Let us know. Type in the comments. Thank you. And how many of you are really clear on what to do? That's awesome as well. If you're part of our programs, you will know how to handle the current situation, because as prices are dropping, we get opportunities at a huge discount. So just to make sure that you know what you invest in, and you have to do your own research. And welcome to the weekly catching up with my partner, Bernie. Hi, Bernie.
catching. Hi, welcome everyone.
Welcome. And myself, Joachim here. And we're going to dig into what's going on currently, both with stocks and with crypto. So let's start with stocks. What's up, Bernie?
A lot of things are going on. So we are heading into a so-called bear market. And I don't talk about the animal, but a market where where the prices are going lower is called a bear market. Whereas when the prices are going up higher, we're calling this a bull market. So we're what is defining a bear market? A bear market is defined by a drop of 20% in the stocks world. So whenever, for example, there is one of the main indices like the S&P 500, if it is dropping, we say we have a bear market in this index. What is an index? What is the S&P 500? The S&P 500 is a so-called index where 500 companies are brought together and they are aggregated and they are building up a so-called index. So, and you can read in this index how these 500 companies are performing all together. And this gives us an idea of the current economical situation when we take the S&P 500. Because it's overall, so the S&P 500 is containing 500 companies, different sectors, different industries. So it's a good overview of the overall market. Whereas the Nasdaq, for example, is consisting of 100 companies focused on the tech sector. So technological companies. So we're getting a pretty good overview what's happening in the technology world when you're watching the Nasdaq. And I will just share my screen with you. I have found an interesting article about the average bear market last, and how long will an average bear market last? Has an average bear market last in the past? And they have researched that, and there are pretty interesting insights. For example, during the COVID pandemic, we had in February 19th to March 23rd, we had just a bear market of just 33 days. And I was surprised myself when I was reading this, because my feeling told me it was much longer, but it was just 33 days. I proved it in the TradingView chart, so the software that we're using to see all the price movements. And before that, we had another bear market in 2009, which was lasting for 62 days. And before that, we had the big crisis, the Lehman Brothers mortgage thing in 2007. And this was 408 days, so a little bit more than 1 year. And then we had the longest S&P bear market was stretching from 1973 to 1974. So from the beginning of the year to closely the end of the year. So we're talking about roughly 2 years, 1.5, 2 years. So this, or 21 months, so close to 2 years. And the FIM index fell in this period over 48%. And one interesting number is the average. Another interesting number, the average is 200 during the 1930s is 268.3 days, or roughly 21 months. What does this? How does it help us? What does it tell us? Is this important for us? Yes, it can help us in, we are always trying to predict the future, to make assumptions what's happening, because we're living in cycles. And if we're watching the past, we are able to make, up to a certain point, we are able to make some predictions. We can project the past into the future. We can mirror it into the future. And if I see, since the 1930s, where we had a really huge economical crisis, when we were seeing their 620-day bear market, this tells me that I assume we don't see a bear market that long now. So that brings me to another assumption, which could say, there is a wording, there is a saying, it says, sell in May and go away. But also remember to come back in September. And this is what could happen now, because the time that we are seeing from May to September is a pretty good time for a bear market. People are going away in the summers, they want to make holidays, so they don't focus on investing. And this could be a good time to collect yourself, to collect your money, to prepare yourself, and to start slowly getting into investing. And this is what we're doing right here. We have up our pie challenge, for example. So we were taking a look at our pie a little bit later in this call, and this was the biggest news for today. So we are heading into bear market. And yeah, one more thing, usually the Wall Street is always let's say giving you some tips or recommendations. And this time they are holding back their buy the dip recommendation. So they're holding the calls to buy the dip. Usually they say, if it dips, if it goes lower, buy the dip, take the opportunity. And we see, let's have a short look on the trading view. What does it mean? So a dip means if the prices are falling and making some kind of a dip. So if we're seeing a dip like this, this is a dip. So when the prices are falling down, but they're recovering again, then this bottom here is a dip. And usually they say buy the dip. You never know when the dip comes, but you can make, again, assumptions. So what we're seeing here, this is our S&P 500 that we're watching every week. So this is the chart I have talked about before. And as you can see, we have had, during the last 4 days, it was dropping really, really hard. We have opened here some so-called gaps. This is a jump over the price. So when the last closing price is much higher than the next opening price, and it doesn't get filled. And so this is telling me there is momentum in the movement, and momentum means usually we are going lower. So we are in this case. And as you watch our assumptions from the last weeks, I say it could go upwards and downwards. And if it's heading downwards, then we're seeing, I say I'm expecting it to come down low here. As we have broken through this level here that we were entering last week or week before, we are heading towards the next level here that I'm seeing here in this chart. So I always see certain support or resistance levels in a chart, and this is where I see the next support. So this is roughly around 3,500, could be reached within the next days, but I would say you don't have to be in a hurry to get invested, but prepare yourself, get some cash available, get yourself educated, get a plan, get a strategy. We have our 5 pillars of a successful investor. if you follow those 5 pillars, you will be set up properly for investing and for making money in these markets. So now I've talked a lot. Joachim, what's your take?
Yeah, Bernie, I just want to put emphasis on what you said. Prices are down, and that means a lot of people, they choose to become fearful and uncertain with what's going on. And I understand if you not yet have educated yourself. And the cool thing here is that you can choose what meaning you give to this. You can educate yourself, and you can actually get an understanding that these are great times because there are opportunities. As Bernie mentioned, these are cycles. Look at, as Bernie showed, what happened in 2008 in the financial crisis. Prices are dropping, and what happened afterwards? New all-time highs, record highs. Same in 2020 with the pandemic. Prices goes down, it comes back up. What's going to happen now? Most likely it's going to go up again because you and I, we want a better lifestyle, and businesses exist to deliver that better lifestyle to us, to create products and services that we want. So these are cycles. That are what the wealthy people realized as well. They buy, like in circumstances like these, they buy the rundown stocks, they buy things at discounts, they buy assets at discounts. When prices turns, they sell with massive profits. And it's the same thing going on in the crypto world. Before I bring up the graph, Bernie, is there anything you want to add to this? Okay, I just show you the graph of Bitcoin here. It's the same thing going on here. With Bitcoin is currently down 67% from the all-time high back in November. So it's huge. It's huge. It's down. And let's take a standpoint on what's going to happen with the crypto world. There is very good outlooks in the world of crypto, because more and more people are actually getting access to the crypto technology, to the blockchain, especially with Ethereum. More and more people want to have a wallet that's kind of like a crypto account to hold Ethereum. So more and more users are coming into the world of crypto, and big institutions and banks are talking about this as well. And one cool thing is that JP Morgan, one of the biggest financial institutions, they announced that their digital asset branch, which is known as Onyx Digital Assets, they're working on technology that are going to allow financial institutions, financial service providers to exchange different kind of assets in a digital realm without digging into their own cash reserves. So the point is to digitalize, tokenize, making a kind of kryptonize things. I'm not sure if that is a word, kryptonize, but we might have invented the word, Bernie. But the thing is to take traditional financial services, making them available with a new technology, with blockchain technology. What that means is that these blockchain technology is going to come more integrated into our life, and there will be more services built upon the new technology. And what's going to happen in the future when people see that, okay, I can deal with the increased prices and the increased interest rates, which is basically what's behind this drop in price, because people become fearful. What's going to happen when people see that, hey, I will actually be able to thrive, my life is going to move forward? Yeah, we have a very bright future ahead. History shows that these are cycles. So prepare yourself, as Bernie said, get yourself a proven strategy, something we provide here at Catching Secrets as well. So let us know if you're ready to take the step in order to create an income stream from investing. With that, Bernie, I'm not sure if you want to add anything, or I believe it's time to look into the pie.
Great. Yes. So it's time for looking into the pie. Thank you. Nothing to add on that. We are seeing prices are going down, but this is for us. It's always a question of framing. So how you see things. You can see things from this perspective. You can see things from that perspective. Some people, they're getting emotional. Some people, they're getting fearful when they're seeing prices going lower. They're saying, oh my God, my funds are getting lower. I see my investments are going lower. And then there are those people that are framing the whole thing the happy way, like we do, because we are happy about the discounts we get. We're doing research on companies, we're doing research on cryptocurrencies, and then we come across these investment opportunities are good for us. They have a good value, and if the price for this value is going down, we're happy because the value isn't changing drastically. The value isn't changing at all. I mean, if you take a company like Facebook, for example, so do you think that the value of the company, so all the assets that they are owning, that this has changed by 20% to the downside since the beginning of the year? I wouldn't say so. And nevertheless, the price has been going down. So the valuation is there, is a great value of the company. And we have a discount on the price because the price is getting lower. So it offers opportunities to buy in even cheaper. I was willing to pay the price in January when it was 20% higher, but now I'm happy about the discount. The only thing that I have to ensure is that I have money available that allows me to still keep up investing. And this is what we're doing with Pi here. I will just share the screen. Our Pi here today, we are investing one more time into our Pi. And as you can see, we are down roughly 12%, which is, if you compare it to the S&P 500, which I mentioned before. So that's our benchmark for the overall market, the overall world here. We are down here 20%. So we have, let's say, outperformed this index, the overall market. We have outperformed it so far by 8%. So there is a difference of 8%. We've been down 12%. S&P 500 is down 20%. And now I'm really happy that this happened because this allows me to buy in even cheaper. And today is investment time. That means we are looking at our holdings. We don't add a holding today, we just invest into our holdings. If you're investing here, you have to enter a number. How do you determine the number that you enter here? We have also a spreadsheet, and if you don't know what I'm talking about, we have our Pi challenge up on YouTube, and you can just watch it there. Go to YouTube, search for Gene Secrets Pi challenge, and you will find it. And here you are in the spreadsheet. This is our log, our trading or investment log. And here we are entering all the investments that we're doing in this Pi. I'm entering in the first column the current date, which is the 14th of June. The Pi 1 balance before investing. This is something we have to look up right now in our Pi again. So I'm heading back to the Pi. If it shows to me, it shows up to me. Where is it? So here we go. Then I'm closing this window. I'm going to overview, and here I see my Pi is at 791.20. 791.20. This is the number 791.20 that I'm entering here. So compared to the last week, is this a loss or a win? This is a loss. And this means we have to invest the higher amount. Again, if you don't know what I'm talking about, then I will then just watch our Pi challenge and we will tell you exactly what it's all about. Extra amount, this is to pay in. We don't pay in anything. Cash reserve, that's the next column that we have to investigate on in the Pi on Trading 212. We'll find this here. Free funds available is 4,140. Although I have to mention that this is the number before investing. First, we have to do the investment. So I'm going back to the invest. And the spreadsheet told me before it's 93.75. This is the amount to invest today. And you will see the pi's free cash of 4 cents will be invested as well. So we have to add that afterwards in our spreadsheet. Now I'm going to go to self-balancing. This is very important so that you're selling all those assets that have been profitable and the other ones will get sold. We have to confirm the buy, and that's it basically. Now we're waiting for the investments to happen. Investing. In the meanwhile, I can have a look on the free funds available. Yes, so free funds available. Now we're taking this number, free funds available, 4,006.65. Switching back to the spreadsheet. 4,006.65. Other shares value, this is just if you have other shares in your pie. And basically that's it for this week. This is how we are doing our log. This is all the work that has to be done on a in our case, on a 2-weekly basis. So really low effort. I mean, this didn't take 15 minutes. If I'm doing this twice a month, this is 30 minutes per month. I mean, we're investing here with an easy to go strategy. 30 minutes per month. Can you do that? Can you invest 30 minutes in your profits? You may say now, hey, Bernie, you are not in profits. You have here a downside of 12%. That's true, but I'm watching the long-term perspective. I'm watching a long-term view, and in the long-term run, I will make the profits. And then when it comes to the turn, when we have overcome the bear market, then we are very fastly in the profits, and then we just let the profits run and we make the money. So this is the concept. This is how it has proven to work, and we're inviting you to join the Pi Challenge and to join other programs as well. If you have any questions, drop a comment. We will be happy to answer them, to answer your comments in the next calls. So that was it from my side, Joachim.
Great. Please, people, have a look at what's going on. You get to decide what meaning you give to what's going on. Is this an opportunity for you that you're going to tap into? It's when most people are fearful about what's going on that the wealthy people make the most money. And we are here to prepare you for the largest wealth transfer that's going on in the world, especially in the world of crypto as well. So have a look, educate yourself. Bernie, let's do our catching move.
Yes, let's do the catching move. Thanks for watching. Thanks for being part of this week's catching up. See you next week. Happy profits. Happy investing. Profits, maybe not profits, but happy investing. See you next week.
And profits.
And profits. We make profits all the time.
Okay. Catching.
Please be aware, we are no financial advisors. We do not provide any advice. We only share our experience and our results are not typical. If we mention any stocks, funds and other type of investments, it is for educational and illustrational purposes only. Most people are unable to achieve similar results to ours. If you want to achieve similar results, you have to commit yourself to systemize, to learn and to stick to the rules.